What if I told you that the biggest crypto crash of the decade didn't happen because of bad technology or scams, but because of human emotion? In October 2025, Bitcoin lost over $400 billion in value in just 3 days. Ethereum fell harder than ever. Investors panicked, exchanges froze, and overnight millions of people went from crypto rich to crypto broke. But here's the crazy part: this crash didn't destroy the crypto market. It reset it. So, what really caused the 2025 crypto crash? And is this the end of the digital gold rush or the biggest opportunity of the decade? Let's break it down. Hey everyone, welcome back to Cripoburn, your trusted source for global finance and crypto insights. If you're watching from the US, UK, or Canada, this episode is especially for you because what happened in October 2025 wasn't just a crypto story. It was a wake-up call for the entire financial world. So grab a cup of coffee, hit that like button, and let's dive deep into the truth behind the 2025 crypto meltdown. Section 1. The calm before the storm. 1:32:30 Early 2025 felt unstoppable. Bitcoin was smashing records, hovering near $128,000. Ethereum surged past $6,000. Even meme coins were making millionaires overnight. Social media was filled with "we're going to the moon" memes. Retail investors poured money in like it was free. But behind that excitement, something dangerous was building leverage. Traders were borrowing insane amounts of money, betting that prices would keep rising forever. And we all know what happens when the music stops, right? Then came the bombshell. On October 4, 2025, the US Federal Reserve announced a surprise rate hike. The markets freaked out. Suddenly, the cheap money that fueled the crypto boom was gone. Within hours, over-leveraged positions began to crumble. Liquidations hit like falling dominoes. Bitcoin dropped 18%. Ethereum crashed 25%. And smaller coins? Some lost 60% in a single day. Panic spread faster than wildfire. Twitter turned into chaos. Reddit threads exploded. And exchanges couldn't keep up. Some even froze withdrawals again. But here's the truth: the crash wasn't about the Fed alone. It was about fear. See, markets don't move on logic. They move on emotion. When people saw red candles everywhere, logic disappeared. Fear took over. Investors started dumping their bags just to get out. Whales, the big money players, knew exactly what was happening. They waited patiently, and when everyone else panicked, they bought the dip. It was a massive transfer of wealth from emotional investors to disciplined ones.
And here's something no one tells you: crashes don't destroy wealth, panic does. The ripple effects were global. In the US, regulators once again called for stricter crypto laws. The SEC started investigating major exchanges that froze user funds. In the UK, financial influencers faced heat for promoting high-risk tokens. The Bank of England warned retail traders about dangerous speculation. And in Canada, big banks tightened restrictions on crypto transactions. It felt like 2022 all over again, but with even higher stakes. Still, beneath the panic, something powerful was brewing. Institutional investors, the same ones who pulled out during the crash, quietly started coming back. Why? Because they understand a fundamental truth: every crash is a reset. It clears out the noise. It removes the gamblers. It gives real investors a second chance. Bitcoin's network stayed strong. Ethereum kept processing transactions. The tech didn't fail, people did. History tells us that every crypto winter leads to an even bigger spring. Remember 2018? Remember 2020? Every time crypto died, it came back stronger. So what can we learn from the 2025 crash? Lesson 1: don't trade with borrowed money. Leverage kills faster than you think. Lesson 2: always use stop losses. Protecting your capital is smarter than chasing profits. Lesson 3: ignore the hype. Social media influencers don't show you their losses. Lesson 4: diversify. Crypto is just one piece of the puzzle. And lesson 5: patience is power. Wealth isn't made in the hype. It's made in the hold. Every great investor you've ever admired, Buffett, Dalio, even early crypto OGs, made money not by timing the market, but by staying in it. So where does crypto go from here? Analysts believe Bitcoin could rebound to $150,000 by mid-2026 once inflation cools and rates drop. Ethereum is still the backbone of decentralized finance, and UI-based blockchain projects are gaining real-world traction. Regulations are coming, but they're not the enemy. They'll bring legitimacy, trust, and maybe even stability. If you survived this crash, take it as a badge of honor. You've seen history in motion. Now, the question is, will you panic like before, or will you prepare for what's next? Because the truth is markets crash, but great investors rise. If you found value in this video, hit the like button, share it with your fellow investors, and subscribe to Cripoburn for more deep dive financial insights every week. Remember, it's not about predicting the next crash. It's about being ready when it comes. Stay smart, stay disciplined, and I'll see you in the next one.